So my next guest is considered a preeminent, one of the preeminent experts on when it comes to charting on Wall Street. And recently he's been zeroing in on small caps. Now there's so many ways that you can use charts. So Stephen has been kind enough to help us learn how to use them in more than one way. Let's bring in Suttmeier Technical Strategies president and founder, Stephen Suttmeier. Stephen, you know, charts, people use charts. I've read somewhere the average investor takes about 30 minutes to make a decision on investing, and half of that is looking at charts.
Correct.
But they don't, most of them don't really understand exactly what they're looking at. So let's talk about the Russell 2000, because this is a name that every now and then looks intriguing. The last two sessions it was up, everything else was down. First chart, what's the importance of this one?
Well, I mean, when you look at this particular chart of IWM, it has a head and shoulders bottom, and it broke out of that bottom, retested it, and then rallied above the 200-day moving average, which is that red line. As it stands right now, that is a bullish setup. As we've written earlier in the month, it was confirmed by advanced decline line, advanced decline volume. So we think there's a chance if we continue to hold. Right. Ideally, you want to hold the 200-day moving average. If we undercut 2 days ago around 216.
Right here, we just a split second.
Yeah, and then a split second, and then sometimes you get a good rally off of those.
Right.
And then 210 to 207, big support there. If we can hold that confidence in that head and shoulders bottom, and potential back to the old highs from November of 2024.
So you got the head, the shoulder, head, shoulder. We retested it. That's good. We held.
Exactly.
And that was it. This is when your buy signal starts. Right. This whole, that's part of the buy. It's a process. It's not one event, right?
Exactly.
It's a process of
yeah.
things.
I mean, we were being proactive too. I mean, back in May, we were talking about this shoulder, saying we think it's head and shoulders.
Right.
The AD line was solid. The breadth lines were solid as the pattern was developing, and that's what we want to see.
So then let's talk about small cap growth versus small cap value, because, you know, the Russell, I think something like 40% of these names don't make money. So, you know, listen, although Unprofitable Tech is killing it right now, you know, and then there's the issue with yields and refinancings and things like that. What is this chart telling us with this relationship?
Well, what I like to see is growth beating value in small caps. It confirmed that there was stability in small caps in 2022. And although small caps, or the Russell, has been kind of range bound, definitely range bound, this supports the case for it eventually breaking out of that range. Because
is this an ascending triangle? Was it an ascending triangle?
I mean, you can see a little head and shoulders bottom here, just an uptrend, maybe a cup and handle right here.
Okay.
So we were, you know, the last time we were writing about this, it was testing support, and we thought it looked good there, and now it's breaking through resistance. So we think we can get a little bit higher, you know, for maybe a 50% retracement, maybe even 61.8.
These are Fibonacci numbers?
Correct.
Okay.
Yeah. I mean, eventually, I mean, if things really work out, I mean, maybe it's a bigger base for back to those highs from late 2020.
That would be huge. That would be absolutely huge. All right, so again, the S&P has been crushing, absolutely crushing. You know, all the money. Last week, I know we're on pace right now, $400 billion going into large caps. 80 billion out of small caps. That's what happens when you have a chart like this. This is the Russell versus the S&P 500. But we're starting to build a base here.
Yeah, I mean, it could be a double bottom. I mean, you know, as a technical guy, I don't really like buying those big double bottoms and downtrends unless you get the definitive breakout. But I have to acknowledge that it's there. You know, you got, if I put on an RSI in this chart, it has higher lows, meaning that there's building momentum here that would support the case for that ratio, meaning some outperformance for the Russell versus the S&P. It could very well be within this existing downtrend and heading lower again if it does happen. But again, I mean, if we form that double bottom and we start breaking through the 100-day, the 200-day moving average and holding it and then breaking that downtrend, then there's a bigger story there.
Right.
Until
and it also creates a sense of urgency.
Correct.
Right.
Yes.
Let's bring up the S&P 500 itself, because this has also been a juggernaut. So that V-shaped recovery that almost 99% of folks on Wall Street said it wasn't going to happen, and happened. Then it stalled a bit. They said it was over. Here we go again.
Well, just like the Russell 2000, market breadth broke out in May, you know, on this indicator, telling us that it was a leading indicator for new highs. And that the Russell has that too. So the Russell could go to new highs.
Before, real quick, because we only have 30 seconds.
Yep.
I got to bring up the NASDAQ 100.
Go for it.
Because that's where all the money's been made right now.
Yeah.
Again, another huge juggernaut. Is there anything in this chart that would make you want to sell?
I mean, put it this way. Tactically speaking, weaker period of seasonality. We could struggle a little bit.
Okay.
But I think you buy you buy a dip. I mean, the NASDAQ, S&P, have monthly MACD buy signals in June and July, and those are historically bullish. The interesting thing is you do tend to get seasonal volatility with that backdrop of a monthly MACD being bullish, I think you buy into it.
Okay.
We could see this at 27,600. I got a projection there.
27,600.
Yes.
You made my day. Thanks a lot.
Yep.
Appreciate it. Thanks, Stephen.